Should we buy or sell Plug Power? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here we have the megatrends. And from the lows, they are very substantially outperforming the S&P 500. We have a theme here that I just call hydrogen and fuel cells. 28-ish% here from the 52-week low, minus 57% from the highs. So very deep into bear market territory. We have Plug Power here on the bottom. Yeah, 30-ish% from the low, minus 65% bear market. Here is Plug Power's website, the Green Hydrogen at Work. Plug is proud to be the industry leader behind the end-to-end green hydrogen ecosystem. So here you can see some illustration of how it works. Yeah, looks nice. Unlimited supply generated from renewable energy, ready now. Yeah, so our world-changing customers. Yeah, a very nice website, and yeah, here, an integrated energy company working for you. Yeah, 51 million hydrogen fills. That's pretty good. So let's jump into the charts. So this is big picture weekly data points, and so this stock has been public for quite some time. But it's very difficult to know whether the company, whether Plug Power back in 2000 is the same company that it is now. But anyway, it emerged from a rounding bottom pattern. You could argue that we have something a bit cup and handle-ish. So let me draw it in. So you have like a cup, and then you have like a very deep handle potentially forming. That would be bullish. So the moving average in play at the moment is the red 200-week moving average. And you see here that when we go back and sort of like check whether it is legitimate or not, yes, there is a rather surgical interaction here between price and that moving average, bullishly, but also the bears are quite fond of shorting the stock when that moving average offers resistance. So the 200-week in red is a very big deal. Just look here how surgical the interaction is. It was amazing for short sellers, but when the bulls reclaim it, I mean buying. So let's just measure if you bought that moving average. So buying the 200-week moving average here, just at this point you would have approaching 600% gain. So it obviously is a big deal. And guess what? We are currently testing that historically very important moving average at the moment. Just that we are testing the moving average and that it so far is not breaking, obviously does not mean that it must work. This support level will only work if more buyers than sellers run towards Plug Power. That's what we need. That is what forms lows. If we get more sellers than buyers, then this support level will break. I think it looks interesting at this point. Here we have the daily data points. The problem is that we could have formed some horizontal support. Let me draw it in. So around here, we could have had horizontal support, but we did get below it. In all likelihood, that will be horizontal resistance going forward. So even though we do have support here on the weeklies, with the 200-week, it's not going to be like a clean trip up. So looks like we might even have some kind of time cycles. Yeah, we do have some relatively reliable time cycles. The declining phase is supposed to end later into June, though. That is when a new rising phase begins. So let's look at these other indicators. So looking here at the RSI and some of the PPOs here on the weeklies, we are bouncing from a very low level on the weekly RSI. We have, however, been a bit lower in the past during, a full panic in the market. Same with the PPOs, which measures the difference between the price and various moving averages. Going to the dailies, accumulation distribution is actually holding up relatively well. So there is some bullish divergence here between price, which has been making, some lower highs and lower lows, and accumulation distribution, which is actually sort of holding quite steady. So that suggests that we have some bigger funds building positions in Plug Power. So I think the key event at the moment is obviously 200 EMA support. It's a super important moving average, and as we saw, it has been a very big deal in the past for Plug Power. If it becomes a resistance level, then the bears will definitively benefit from that. But currently, this looks just interesting, so I give the bulls a 5. I give them the benefit of the doubt for the simple fact that they are currently holding the ball. Here we have the seasonality for this stock. To the right, it looks very interesting. We are heading towards some of the most bullish seasonality for the stock. I mean, you can see it yourself in green over the last 5, blue last 7, and red last 10 years. Seasonality is very strong towards late June. That's bullish. To the left, we do see over the last 5 years, May and June are some of the strongest months for Plug Power. Over the last 10 years, May is a strong month, closing higher 60% of the time with an average 11-ish% gain. That's good. So we are now looking at the last 20 years. But the tricky thing about this company, as I said in the beginning, is that hydrogen as a valid alternative to fossil fuels, it is a more recent phenomenon. But looking at the last 20 years, May is actually a weak month. In the sense that it only closes higher 40% of the time and on average has a minus 0.7% loss. Given that this is a very new industry in the baby phase, I think that it makes a lot of sense in this case to weight more heavily the more recent seasonality of the stock, which is rather bullish. So I do think I will actually give the bulls a 7 on this one. This is rather strong seasonality. Then we go into the fundamentals. So number 4 sell from Sachs, F value, F growth, F momentum, industry rank, bottom 18%, manufacturing electronics. That's a bit strange. Because this is the blurb here, it focused on the design, development, and commercialization and manufacture of hydrogen fuel cell systems. Yeah. So I don't agree at all with this industry categorization. Market cap is actually a bit sizable, approaching $10 billion US. When we look at insider activity, it gets very interesting. So A means accumulation, buying. So buy. So throughout this year, 2022, and also late last year, we saw 100% accumulation. That is interesting. So insiders are buying. Okay. Then we go here and look at Plug Power to get that the consensus estimates like that. So we see that there are 27 analysts covering the stock. Average 120% price target to the upside. Highest is 374% above. and the biggest pessimists think there's only 9.42% upside. So obviously, there is a major disconnect here between the SACS scores and the price targets and what the insiders are doing. I do think that the activity from the insiders is most important. So I will give this one to the bulls. I will subtract a bit from the SACS rankings, but we end up with a 5. This is very interesting activity. Then we look at correlations. Long term, we have 72% positive with the S&P 500, 96% with ICLN, which is the Global Clean Energy ETF. Then we have 2% with the XLE, the Spider Energy ETF. Short-term correlations, we have 71% with the S&P 500, 96% with ICLN. Then we get 98% positive with HEGEN, which is the hydrogen ETF. And then we do have minus 66% with the energy ETF. So what happens with HEGEN is obviously going to have an impact on plug power. So let's get HEGEN up here. So this is the direction hydrogen ETF. So if you want diversified exposure to this theme, then this is the ETF for you. What I do see here, I see time cycles. This is actually, I mean, so we have seen that there have been these bigger time cycles, but also occasionally these smaller. Based on the most recent time cycles, it suggests that a rising phase is literally starting next week. So that's interesting. Looking here at the RSI, we are also bouncing here from a low level that was very viable back here. It's almost the identical level. So let's actually measure this. This date and range tool is very bad, but at least on investing.com. But yeah, 22% was the max gain was actually approaching 30%. But basically, these rising phases can be very beneficial. And given that many markets now are very oversold, we are very quote-unquote due a mean reversion to the upside. Here we have the daily data points. Yeah, very similar thing. In this case, we do actually have a higher high here on RSI, but lower lows on price. So there's some interesting divergences here. You also have a MACD buy signal here. The most important moving average here is definitively this purple 20-day moving average. It has been very good as a shorting level for the bears, long level for the bulls. We are still below it, so you could of course wait until we get above it as a signal to potentially go long, because currently it is this very good level for the bears, as you can see here as well. Very nice shorting level. Here is the relationship between plug power and the hydrogen ETF. There is one pattern jumping at me immediately. We do have a head and shoulders pattern. The thing is that this is a head and shoulders just right out of the gate. But some of the same logic applies. Yeah, I mean, let's look a bit at the dailies here. I'm pretty sure we do not have enough to get seasonality, or maybe no. Here is the hydrogen ETF against the clean energy ETF. In this case, hydrogen has been underperforming the broader clean energy ETF. Then let's look at ICLN against XLE, which is the classical. Well, let's actually do ICLN against XOP, which is oil and gas exploration and production ETF. So looking here at the weekly data points, we have seen a protracted period of underperformance, which came after we formed this very major double top pattern. We do see that this low end of RSI is currently tested. This time we did get a couple of weeks of rally. We have had 2 weeks of rally so far. I also think I see some time cycles with this pair. So let me just get that handy tool and see whether they are reliable or not. Yeah, that's something around here. You do see that we even got these rallies and declines. So these time cycles are very interesting, and there is this rising phase in development that peaks around mid-July, which means that global clean energy is likely, based on that time cycle, to outperform the oil and gas ETF. If we look at seasonality, it to an extent corroborates that narrative. Clean energy tends to outperform leading up until mid-June. Yeah, I think there's reasons to be bullish here, so I give the bulls a 4. We end up with a 5.3 in favor of the bulls. A very key part of this bullish thesis is 200 weekly moving average support. If that level fails, then that will be very bad. So the most important thing here is definitively this line in the sand. It's very important to have some kind of stop loss level, especially in the current market, which has seen a lot of very interesting opportunities just get torn to shreds because the selling pressure has been very tremendous. And the best thing about the technical analysis is that it is a very good risk management tool. That is the primary way I use it.